Hello, everyone. This is Martin here again. It is Saturday evening, and I'm putting together another video on what I'm looking at for this coming week. We're talking about the week of June the 13th to the 17th, and there are a lot of opportunities. However, I believe this week the volatile markets are going to continue. Do you notice that lately markets are going up? And they're going down, then up, and then sideways. No real established trends, and I believe this is still going to continue for a bit longer, and I'll probably explain why as I go on with this video. So let's take a look at the markets, and I'm going to start with the Euro USD as we always do the weekly chart. Okay, you can see here on the weekly chart. Price basically is just been grinding up and down, and sideways. I want you to take a look for a second here at the left side of your chart. You see, this is what we talk about a trend. I mean, price was even much higher than this right here. Price was actually right about there. Price has gone down. This is what we're calling a trend, and this is the weekly chart, guys. So this is a clear, defined trend. We went up a bit, then all of a sudden we started getting to this up, down, sideways chop. Up, down, up, down, up, down, up, down, and it kind of grinding with no real trend. And that's why it is kind of getting hard to trade. So probably the best idea is that if you get into a trade and you're successful by the end of the next day and you've made some pips, um, sometimes it's even better just to close the trade and not wait for the next day, not knowing if price is going to make another U-turn. So you can see here on the weekly chart, price went down, made the U-turn with this huge last week bullish candle to the upside, and now again, price seems to be making another U-turn for this. Well, last week, I'm sorry, this was the previous week. This was last week here with this black bearish candle. So you can see previous week price went up close to the resistance area in the gray rectangle. Price went up a little bit higher, bounced down lower, and now seems to be making another U-turn to the downside. This is the weekly chart, so let's take a look at the daily chart. Okay, just a second. There we go. Now, I believe this pair is trending a little bit lower. Again, we're talking short term on the daily charts. So I believe price is going to come down lower. Price is right now below the 50, below the 21. So price has room to move down to at least this area of confluence. By that, there's the 100 moving average. You can see the trend line. I've drawn in a upward trend line. This is the short-term support area. So trend lines can act as support, okay? And price could most likely come back down lower. And you either want to do one of two things. You want to wait for a bounce to the upside again, looking for evidence to the upside before you take in a trade to higher, or you want to see if price comes down lower. And you see this area with this large white bullish candle. This is a major line of support for the for the buyers. Uh, we're talking about the 111.40, 111.50 zone. Uh, it'll be interesting to see if price closes below this. If price closes below this, then price is going to go down lower. If price comes down lower, bounces down to here and goes right back up, then we may again have a counter trend play in as our next move. So you kind of have to just wait and see. I mean, right now, I believe you can take a sell trade, wait for price to go back just a wee bit higher, pull back, and then trend continuation to the downside. So that's what I see on this one. The bias for short term is to the downside right now, but caution, we're getting close to a support area right there. Okay, now let's take a quick look. And you can see that clearly here on the LEOD chart. So you can see there's still room for price to come down lower. Price would have to break below this trend line. And if you want to do something, you can always place a pending sell stop below this trend line, like let's say right around there, 111.80. So around the 111.80 mark, pending sell stop, and then if it catches that trade, you're good to go for at least another 80 pips or so. Again, to meet up with this previous support zone right here. Okay, so that's what I see there. The British pound USD. This is the weekly chart. Same thing, up, down, up, down. You can see on the weekly. So there's no real trend at all. However, the one noticeable thing that's really interesting is price with this last weekly candle, this black bearish candle, closed below a longer term trend line. Do you see that? This magenta trend line? Okay, so price closed here, giving me bias to the downside. So I believe price can still go down much further. And I believe we've got room for at least another 130, 150 pips, which is great. If it goes past, if it breaks this area, it can go down all the way to the previous support zone. You can see that from here. If it breaks this area, it can go down to this area right there. So you could, possibly take a sell trade right now, hopefully catching some smaller pips and or just waiting, see if price goes up higher and then down again. But I believe the bias is to the downside. This is the weekly chart. Let's take a quick look at the daily. So you can see here we had a huge down candle. Now this basically tells me that you probably should wait for a pullback. Okay, we're talking about price being here, waiting for price to pull back again, back to this resistance area, then looking for selling evidence to the downside before placing a sell trade. Okay, and so we're looking for um, price to pull back, and then look for a another bearish candle, and then getting in after that to the downside. Okay, you can see here below the MACD histo bars, or has actually just gone below the zero level. So obviously the trend is the trend to the upside is has weakened tremendously, and we are now trending downwards. So we're trending lower on this pair. Okay. And real quickly, the LEOD, you can see we missed the train kind of. Price has gone down well below the bottom yellow line. The blue, you can see below the chart here, the blue RSI is below the yellow sentiment line. So it looks like price is trending lower. And without any other clutter on the chart, you can see price really still can move from here down to previous swing low here. So, and that's good for about 200 pips or so. Okay, so that's what I see there. And let's now travel on to the Australian USD. Okay, now this one's an interesting pair because we were in a long, consistent downtrend. This is the weekly chart. We broke through a trend line. Price has gone higher, then come back down, made a, and then gone back up again. So this is a higher low over the previous swing low here. So we've made a higher low, we made a higher high over the previous high over here. So looks like this pair is trending higher. However, we're again stuck between the resistance area and the last week's candle. I'm just going to blow that up a bit. Do you see that? That last week's candle was a doji, big indecision candle, which means there was big war, going on between the buyers and the sellers for control. No one's really gotten much control just yet, and we kind of have to wait and see. So we either want to wait till price comes up above this resistance area and breaks out to the upside. So that would be a pending buy stop order there, or we want to wait for price to come down and break the 50 SMA over here. Let's just go down to the daily. So you can see on the daily chart, let me just zoom out just a bit. We're in no man's land, so price right now is between the 21. So price is above the 21, but below the 50. My bias is kind of just to wait on this pair. I think Australian dollar has weakened a bit, but I'm going to say wait for evidence. Okay, so We've got to wait for better evidence to see what we're going to do. And again, waiting to see if price can come down back a little bit lower and then make a bounce higher or break up through the 50 and through this area of resistance before we can take a higher trade here. Look at the MACD below, and you can definitely see that the histo bars have gotten quite small, perhaps even getting ready to go above the zero level right here, which means the downtrend has weakened significantly, and we're looking to possibly reverse to the upside at some point soon. Now we get to the LEOD. You can see again, prices come back down to the yellow lines here. We definitely would be looking for price to come down a little bit lower and then looking for a buy trade to the upside, or waiting for something to happen that tells us that this price is going to continue going down lower. Okay, so again, wait. It's a wait situation. Now we get to New Zealand USD. Okay, take a look at this one. And I've zoomed this out a bit. Let me do that again even more. You can see price has gone up, price come back down, price come up, down, going higher. Do you see that? We are in a channel, a kind of a bullish channel that's slowly grinding higher. And I mean slowly. Look, it made a high here. This one, when price went up here, it kind of just retested the previous high and came right back down. So this previous high held, forming a nice resistance zone right here. We carry that resistance forward to the future. When price came here, it had a hard time making its way higher. Remember, this is the weekly chart, so look at that. Up, down, finally broke through, false breakout, came right back to the downside, and now we have probably the best evidence right so far over the previous over the previous couple of months. We have one huge bullish bar. You can see that. And not only was it a huge bullish bar, but it also closed above a previous resistance. The next candle, the next week after that, was another bullish candle. So I kind of expected price for this pair to go higher, but let's take a look at the daily chart to see if it can give us any more clarification. Okay, so on the daily, you can see something quite interesting. This is the daily, so this is the Friday's candle, Thursday, Tuesday's trading right here. On Tuesday, from Tuesday to Wednesday, we have a huge gap. You see that gap? And that is approximately 40, 50 pips. Now, price has come back down. This is a bearish engulfing candle well, pretty close off of the resistance here, but it's a bearish engulfing, leading me to believe that price is going to come back down lower and at least close the gap. How far lower it's going to come, I'm not too sure, but what we want to do is wait for bullish evidence to the upside before we can take a buy trade. Okay, so just pointing you out to all of you out there that there is a gap here. I believe price is going to come down, although this gap may be closed right away on the Sunday Monday trade. So price may come down quite a ways and then shoot right back up. Again, it's a wait and see situation, but my bias is really to the upside. However, sell, you can sell right now. Okay, so let me just get back there. Um, let me put back on the daily chart. So you can sell right now, hoping to catch some pips to the downside, or probably the better thing to do is just wait for price to come back, pull back, and then look for a trend continuation with evidence. Okay, so that's that. The LEOD, you can see right here, price has gone up quite a ways away from the two yellow lines. It's got to come right back. Remember, what goes up must come back down, okay? And that's what you got to do. Is just wait for price to come back down, whether it comes down here and bounces up higher. Now remember, as price is moving from the left side to the right side, so as price is making is coming back a little bit lower, these two yellow lines are still going to continue going up a little higher, okay? And at some point right around there, it will meet. And if you want to know approximately where, I'm going to draw from low to high, and I'm going to draw something else for you. So we're going to look at between 30, retracement 38, 50, 61. Okay, there you go. Okay, so this is the fib, doing a quick fib thing for you here, showing you from swing low to swing high, looking at the retracements. These are retracements in percentages, and the most common and powerful retracements price most likely comes to the either the 38, 50, or 61% area or levels, and that would be around here. So if price can come back down to here, then you could possibly look at taking another buy trade to the upside as long as there's evidence to show that. Okay. Now we get to the US CAD Weekly. Same thing here. Prices come right back down, and I believe price is going to go up higher. I would be waiting for a pullback before looking for selling opportunity to the downside. Let's show you what I mean. Okay, so you can see price has come back higher here, come right back down. So last week was a huge, strong week, strong week for the Canadian dollar. So we had kind of 4 down days, 4 sell days. Now prices come back slowly to the upside. So I'm looking for price to come back higher up to this zone right here. Okay, and then looking for selling evidence to the downside. You can see here the MACD histo bars are still below the zero level. My bias is to the sell side, but what I would be doing and what I'm kind of advocating to everyone out there is just wait for a better pullback. This would be a decision zone here. And if you see any selling evidence like another bearish black candle, then I would take a sell trade. And then from here, you can see we've still got a ways to go. From here, we can go to the previous swing low, which is another 379 pips. Okay. Now, price will come down to retest this swing low, but once it breaks that, it can go down much further. So a lot of room for this price pair to go down further. And again, it all depends on how strong the Canadian dollar is tied into the oil sector. Okay, now LEOD, you can see here, I'm waiting for price to come back higher, okay, before looking at a sell trade to the downside. Now, um, this is what you got to be doing, okay? So you would be looking for price to break below the trend line for you to take a sell trade to the downside. And as price goes to the right here, these yellow lines will be coming to the right side as well, still trending lower. Right now, the blue RSI below the chart here is still below the yellow sentiment line. So my bias is to the south side, except wait for price to come higher, then look for a trend continuation to the downside. Okay, and now moving right along, we're going to get to the US Swiss franc on the weekly. Um, the Swiss franc has also gained a lot of strength over the last few weeks. You can see with these two huge bearish candles. Okay, so on this price pair, the US Swiss franc, when price is going down, that means the Swiss franc is gaining strength against the US dollar. Okay, so remember it's the opposite. So US dollar is going down in price against the Swiss franc. Swiss franc is gaining strength. Here I see price trending lower overall. We are almost at the juncture of here is the 100 moving average. I've also drawn in a trend line, although it's a very weak trend line. Okay, a much better trend line. I'm going to do this. Let's extend that for a second. Okay, right there. So I can see price still coming back down to here. Okay, that is a much better trend line. Um, okay, and so I still see room to the downside. Let's take a look at the daily. Okay, you can see prices come. This is almost a perfect setup here, guys. Price either is going to come back a little bit higher to this area of this gray rectangle, which is resistance, and then you could be looking for selling evidence to the downside, or this could be almost a perfect play where you might want to place a pending sell stop just below the wick of this little doji right here, right there. Okay, I don't know what that is. Let's take a look. So yeah, that's about the 0.96 um 0.96 05 or if price closed below 0.9600 or something like that. But if price reverses to the downside, it may very well take out this low here and then come back all the way down to here. Right now you can see the histo bars are getting bigger past the zero level. They're getting longer, and which means that that price to the downside is gaining momentum. That's what that means. Okay, so the bias is to the downside, and look for a selling opportunity, looking for selling evidence, or placing a pending sell stop order. And this one might be a good one right here because your stop loss then would be just on the other side of this resistance area, or really conservative on the other side of the of this 50 moving average. However, as soon as price goes down further, then move your stop loss down further as well. Okay, and really quickly, let's take a look at the. There you go. So again, we're looking for a bit of a retracement back up higher before looking for a sell trade to the downside. That's the LEOD. And then finally, our last pair, we're looking at the US Japanese weekly. Now here, price has come down really hard. It's gone up. It ground its way up higher. This is the weekly chart. It's come right back down again. So the sellers seem to be they look like they are in control, because every time price goes higher, sellers bring it right back down. The buyers try to bring price higher. Price comes right back down again. Now, last week, and this is an interesting candle. It's kind of a doji. That means there's a pretty good war going on between the sellers and buyers. Sellers still having a lot of strength, and I would not be surprised at some point if price breaks below this 200 SMA. You can see that right here. So this is in the area of confluence. We have a previous swing low. We have a 200 SMA. We have the gray rectangle. And placing a sell stop order below here might be a really good idea. But again, price may just very well go much higher again. So it's one of these things where you're looking for evidence, okay? You're looking for evidence. This is probably a pair that you may want to wait a little bit more longer, just to be able to tell yourself that you do have the evidence to make a informed decision, whether it's to the upside or to the downside. Okay, daily chart really quickly. You can see, well, there's the there's one type of evidence. You can see price over the last 1, 2, 3, 4, 5 days has really gone sideways. So either price is going to go higher, pull back, and then you could be looking at a sell trade opportunity, and that would be my preference, waiting for price to come back higher to this area right here, then looking for selling evidence, because that way your stop loss would be just on the other side of the 50. So your stop loss would be you'd have a very small stop loss. Your reward would be much greater, at least a 2 to 1 risk to reward. Okay, but right now price just seems to be going sideways, so it's wait and see situation. Here's the same thing. You can see we've hit the support area. Price is going sideways, so it's either going to break below this support, or it's going to go up a little bit higher, which is my preference, and then looking for a break to the downside. Now for this week, I also see um, well, last week we had the strong currencies were the Canadian dollar and the Swiss franc. The weak currencies were really the British pound, the Australian dollar, and the euro. And so you may want to look at those cross pairs Um, if you're looking at cross pairs, then definitely look at the British pound cross pairs. That would be my number one choice. There's going to be a lot of volatility with the British pound, and I will tell you why. Let's just go back really quickly. British pound is going to be a lot of volatility. This could be a very dangerous pair to trade. And after the end of this coming week, I would not trade this pair anymore. The reason is because we have this massive Brexit vote on June the 23rd. Now, that's the date where the British voters go to the polls to tell their government whether they will stay within the European Union or whether they will exit the European Union and take care of their own economy on their own terms and conditions. So that's going to be very important. There's going to be a lot of massive volatility. I would not take any more trades at the end of this week on any British pairs unless you like to, unless you're a gambler and go for it, just like a casino. So, anyways, that's my advice to you. That's all the information I've got for you this week. Hopefully, you can send me some emails if you want some more information, or you want me to examine a pair that a currency pair that you are personally looking at, and I will be more than happy to tell you what my thoughts are on that. So take care. Happy trading this week, guys, and we will talk to you again soon. Bye for now.